All right. Good morning. Today, I would like to talk about booms, bubbles, and Bitcoin. And First, just some framework about how these bubbles and how booms in certain markets or asset classes even occur. Like, what are the mechanics that really drive them? From your perspective as a professional speculator.
Well, I think that some are kind of artificial and others are definitely real.
Mm.
Um, in the artificial category, I would put what's going on in today's stock market, which is driven by the creation of trillions and trillions of new American currency units. Uh, and in the real category, uh, hmm, well, uh, I'm thinking of what's happened in the Orient since, well, for decades ago, there's been real growth in
Mm.
the Orient and a huge amount of savings. And it's not so much the creation of more purchasing media in various places. It's the fact that people save their money and then occasionally decide to plunge into the markets somehow. So
Mm.
that's kind of a real boom, reflecting reality. So I, I think I'm accurate in saying that. Can you think of any other?
I remember reading what Jim Rogers, one of his books, probably around 2000, and it was talking about it was focused on commodities. It was talking about China, and he said just the massive actual growth and increase in consumption there, could easily cause a huge increase in demand for certain commodity items. And he used an example of soybean oil, if I remember right. And he said, one additional tablespoon of soybean oil consumption per Chinese, whatever, per individual citizen, on I think on a monthly basis would you know would force the cost of soybean oil to or soybeans to like triple. It was some example like that, and just because the commodity markets especially I seem like they're prone to these really big boom bust cycles where things get really cheap and then they the price goes way up and people think it can't go up anymore, and then some mania even can kind of take place and it can push it way up. Is that true with commodities more so?
Well, futures markets, of course, you buy contracts on typically on the order of 5% margin.
Mm.
So that a little bit of money goes a long way in tying up a bunch of commodities. And as far as that example Jim gave, that's a very astute way to look at what's going to happen. I don't know what the price of soybeans were when he wrote that book. I just can't remember. But for many years, soybeans floated around the $6 per bushel mark. And it was a really big deal when beans went into the teens, where incidentally, uh, beans are about $12 now. Of course, the thing is that, and that book was written, what, 30 years ago, 20 years ago? I
Yeah,
forget.
20 I think it was written in 1998, is what my memories is.
Okay, we're talking a little over 20 years. So the dollar's lost about half of its value since then. So, and beans were, I think, not looking at a chart, they were probably close to $6 back then.
Mhm.
So in real terms, beans have gone nowhere, going from 6 to 12, because when prices are up, farmers plant hedgerow to hedgerow, number one. And number two, uh, the technology of agriculture means that they're always getting more beans per acre, so that it's really become much more productive. Oh, that said, that's a great way, what you spelled out of, figuring out the fundamentals of soybeans, which or anything, since it's these are international markets, and you don't know what's going on in the jungles of Indonesia where they're harvesting palm oil to compete with soybean oil. It's very, very complex. So, no, it's a good way to look at it.
Do you think that um, are these we talked about the business cycle and boom and bust before, just in from in basic economics, which we had an episode about that, which I'll link to in the description. But I wonder if you see a version of that within markets that is can be, especially it seems like within commodities, but I guess within tech stocks in 1999, 2000, you see a version of it where people just start to go crazy for a certain asset class and dump money in it, and it starts to turn into a mania. It goes from a bull market essentially into this bubble territory. And like you said, it's driven a lot of times right now, it seems to be driven by all this money that's printed everywhere, where there's everything has to go up in price essentially because there's just too much money around. I mean, every asset seems like it has to. But there's a psychology to this. And I mean, you as in some of like maybe you can talk about some of the boom cycles that you've invested in that turn into bubble territory, and how you can tell where it is in that cycle, where it is, if it's just starting to take off, if it has lots of legs to run still, if it's time to sell.
Well, one classic example that I made that treated me well, of course, I sold too soon, uh, and it was in the newsletter back in the mid 80s, were, well, the Hong Kong stock market. Well, there were three stock markets I zeroed in on at the time: Hong Kong, Spain, and Belgium. And all three of them had current dividend yields in the 12 to 15% area, price uh, earnings ratios of around 3 or 4 to 1, which is really, really cheap,
Incredible.
and price to book value of about 50%. So they were like at giveaway levels. And, you know, things looked grim. And looking at it from a distance, I figured they were all basically, sound places. It was a great place to be. Uh,
Well,
and a bubble would be right now in the U.S. markets, tech stocks especially. I mean, margin, which is borrowed money that's made available for buying stocks through brokers. I think it's something like $600 billion now, which is twice what it was at the previous peak uh, back in '99. So, an old saying in the market is money makes the mirror go, and it's a lot of borrowed money. Stocks go down, and people get margin calls. There's forced selling, and that's how crashes start with
so
borrowed money.
one of the interesting things about those markets in that time is that because their current dividend yields, there really was very little downside to owning it, because you were gonna basically because of the payments, the earnings you were earning from the dividends. So there wasn't much risk associated with owning them. I guess they could go down in value, but if you just wanted the income anyway, would it matter that much if they went down in value? Whereas in the stock market today, there's no income essentially that is produced from any of the from the certainly the tech stocks. So there's
No,
lots of
not
risk.
really. And actually, there are some gold stocks, North American traded gold stocks, rarely yield significant dividends. But now there's a number of issues that are yielding 2 and 3%, and I think those dividends are going to go up a lot because right now, if all-in sustaining costs of the average mining company are about $1,000 an ounce, but gold is about $2,000 an ounce, these companies are coining money and they're going to pay out a lot in dividends. That's just the way it works. I mean, it's never going to get to the level that it was a year I remember very well, 1976, just after the Soweto riots, when it looked like South Africa was finally going to collapse in a bloody mess. And short life, high cost mines, none of them are, you know, the whole mining business in South Africa has changed totally. But at the bottom, right after the Soweto riots, which was exactly at the time that gold came down from about 200, which it hit after it was legalized a few years before, to $103. I remember that bottom exactly. It happened on the same day. And those stocks were yielding 50, 60, 70% in current dividends.
My God.
And since gold from there went from $100 an ounce up to 800, those dividends skyrocketed. So I don't know if I told the story of how I managed to buy these things accidentally at the exact bottom, but I did, and I held them pretty much to the top.
That's amazing.
So sometimes you get lucky, and we're going to get really lucky this time with the gold stocks again. I'm convinced of it, because institutions are not interested in it. People run institutions, believe Warren Buffett's pet rock meme about gold. They've been educated in economics, told the same thing, so they don't understand the story. And of course, it's a 19th century choo-choo train kind of business in many ways. We're playing with big yellow trucks in the dirt. That's a long way from advanced microchips and that.
Yeah,
Although
not
it's becoming a
sexy.
high-tech industry, unbeknownst to these guys. So yeah, I'm super long gold stocks. So
And I have to do a little.
betting farm on them. I don't know what I'm going to do with all that money, quite frankly. I mean, I don't need another farm. Farms are basically, money holes. They're almost farms. Farms are basically as bad as owning a boat, and I don't want a boat. But
Better to have that problem. What to do with all the money that you earn from the gold stock boom than the reverse of that.
yeah, it sure is. Yeah, no
So
question.
let me do a
Yeah.
little commercial for our email list. If you sign up for our email list, which there'll be a link in the description, you can get a report that has predictions for the next decade and some specific gold stock recommendations from Doug. So if you go find that in the description, sign up, and we'll email that to you right away. So let's one of the questions that I have about this boom bust thing, and is, relating it to this new asset class, to Bitcoin, and it's how someone might know whether or not it's it's in a bull market, or it's booming, or versus when it's in a bubble. And because it is such a new asset class, I mean, people don't really understand it anyway, but they see this incredible price action. I mean, you look at, since we first talked about it in one of these episodes, I don't know, maybe 3 months ago, it was $10,000. Now it's 33,000. And I mean, that's just incredible. It's an incredible jump in price. So is it in a bubble? How would you know?
Yeah, and what are the actual fundamentals in back of Bitcoin?
Yeah.
Because I don't think we were talking about this on the air yesterday, but what is it? 23 million is the maximum of number of Bitcoins that can in numerous ways that Bitcoins can be lost, but maybe there's never going to be more than, who knows, 15 million.
Right.
So it's a limited supply, but they're of real value as transfer mechanisms, especially. Here's why I think it can go higher, actually. Here's one of my arguments for going higher, is that as the economy gets totally out of control in the next few years, and I'm really confident that's going to happen, one thing that governments are going to do is put on foreign exchange controls to keep capital from leaving their borders and going where it's safer and more welcome. You're going to make it very hard to do. However, Bitcoin obviates foreign exchange controls. They really can't stop it the way they can stop normal transfers of dollars over the SWIFT system, or paper dollars by checking your baggage at the airport when you're leaving. So there's going to be a lot more buying of Bitcoin for that reason. It's going to become better known and more widely used. And what was that statistic that we were talking about the other day, where just one small institution
Yep.
Well, exactly
So
right.
yeah, there's a firm called Grayscale, which basically has a fund that is acquiring these assets on behalf of its investors, and it's a relatively small fund. I mean, the grand scheme of things, it's tiny. They in December bought up three times the number of new Bitcoin that were produced. So they are eating up more than three. They're eating up 300% of the new supply. So there's, basically there's just not enough of it for the demand that's there. And I think that's one thing I like about the Bitcoin market. Watching it is that it seems like because there aren't all these extravagant financial instruments and derivatives and all that Wall Street brings to all of its other asset classes, it seems to operate under what you'd expect would be market fundamentals, meaning supply and demand, changes, which cause it to have great volatility from time to time. But the fact is that there's a lot more people trying to buy Bitcoin today than there is available to sell, and that's why the price keeps going up.
Yes, well, that makes a lot of sense. And in many ways, actually, except for the fact it's not tangible and physical, uh, it, Bitcoin is a lot like gold because even though Grayscale bought considerably more Bitcoin in a month than was being minted, it's similar to gold insofar as the above ground stock of gold at the moment, nearest guess, is about 6 billion ounces. And new production of gold is roughly 80 million ounces a year.
Mm.
So the gold supply is growing at about 1.3% per year, or something on that order. And I don't know what it is for Bitcoin, but it must be kind of similar at this point anyway,
Well,
with the
it's
happenings that they've
right
had.
now, I believe it's 900 new a day. So certainly the new supply of Bitcoin is definitely a higher percentage of the overall stock than what you see in gold with 900 a day. But there's this halvening essentially. Well, I don't know if people know how that works, but basically, there over a period of time, there's a process where the number of Bitcoin that can be mined gets cut in half. That happened earlier this year. It happened, I believe, the last time was in 2017, and so it slows down the new mining of Bitcoin, and also there's an ultimate cap on that, how much can be produced in total. So those things all, by drying up that supply, that certainly makes it so that it's pushes the price up if the demand is high. And right now, I mean, PayPal buys more than is mined in a day. Grayscale bought three times what was mined for the month of December. And there's a number of other big institutions that are going in there. And I think that frankly, individuals are actually haven't in 2017, individuals drove the bull market, in Bitcoin, but this time it's really institutional driven, at least so far. And they still have all the individuals that are going to be piling in again at some point. And although it's been crazy price action, if you watch Bitcoin since 2011, like I have, honestly, this is not abnormal the way it's behaving now.
Yeah, it's going higher. I mean, a few years ago, John McAfee said that he thought Bitcoin was going to $1 million a coin. Uh, Possible? Yeah, I suppose it's possible. If we multiply out the numbers, Bitcoin is still a pretty small asset class. I mean, let's say 15 million Bitcoin times $10,000. So what is that, $500 billion or something like that,
Yeah,
that kind of order of magnitude, which is a lot of money, but not as much money as it used to be. And it's less every day.
yeah. Well, and I think, the biggest thing is it's like, how would someone know if, because a lot of people, I was talking to someone the other day who said, well, I mean, I'm kind of interested in Bitcoin, but I mean, at $27,000, which is what it was when I talked to him, it just seems like, that's too high. I mean, because it was just $20,000, like, a month ago. So how could I possibly do this? It seems like it's a huge mistake to buy in. And I wonder if some of the big bull markets you've seen in gold stocks in the past, I'm sure people felt that way along the way. They felt like they'd missed it. They'd missed the ride. And how do you know?
It's, well, you really don't. I mean, look, I, I remember personally stocks that I was involved in, like, well, actually, I wasn't directly involved in it. I was just a shareholder, but it was the greatest fraud in mining history, Bre-X, where it was planned from early days as being a fraud, where they pretended to find a gigantic deposit in orangutan pasture in Indonesia. And that stock, from when I first bought it at $1, and I didn't sell it at the top, but it went to $240 a share. 240 to 1 in a, what was it, a year, 18 months.
Wow.
And another one was Diamond Fields, which started out as an offshore diamond mining operation offshore in Namibia. So I bought 100,000 shares with a full warrant at 25 cents. And I bought more, believe it or not, at $4 with the full warrant. This was my big score, actually. And it turned out they didn't find any diamonds. That was a disaster. But at the last minute, the geologists, when they were wrapping up the show in Newfoundland, saw an interesting formation, landed the helicopter, took some samples, and it turned out to be one of the biggest nickel discoveries in history.
Hmm.
Uh, Stock went to about 120 or something
Oh, wow.
per. So, for early investors, that was like a 500 to 1 shot. I mean, that's incredible. With the warrants, that's 1,000 to 1 shot.
It's amazing. So how would
It's, you
so
know, and we're not talking over a lifetime. We're talking over a matter of a couple of years. That's it.
you got to imagine that people that, you got in very early on those, but you got to imagine that when they, gone up 100 to 1 at that, at some point, people look at it and they feel like they've missed it and it's too late. And how did you, I mean, how could an investor recognize, is there any way to recognize that you're in the middle of it rather than at the end of it?
Yeah. Well, I know where the end of it's going to come for gold this time. It's, as I've often said, it's going to be when some big magazine, maybe Slyman Newspeak won't exist by then, but The Economist probably will. It's marginally better than they are. And they'll have a picture of a golden bear tearing apart the New York Stock Exchange on the front cover. And that's going to be the bell ringing. I'm sure it's going to happen, to get out of gold and gold stocks and get into quality common stocks, Berkshire Hathaway, something like that. So that's when the bell's going to ring at the top. But in the meantime, the trend is your friend. So,
Hmm.
as long as things keep moving, the fundamentals don't really matter that much. Look, there are stocks being floated now that I mean, it really is silly season. But I'm just asking. The only question I have is when the stock market crashes, when things really become overwrought, and maybe there's some external event that scares everybody, and then the market goes down, and then people have to sell the margin, and then earning. There's all kinds of things that could happen. I'm just wondering, well, what's going to happen to gold stocks? Because in circumstances like that, they could go up because they're in gold, but they're also stocks.
Yep.
And people might throw the baby out with the bathwater because there's a strong bid and they need the cash. So this is a dangerous time to be in the market. We're getting towards the top. I mean, that's pretty clear, but how high is this tree going to grow? Uh, Gee, I don't know. Is it an oak or maybe it's a redwood? It's hard to say, but it's so rare that you got something like this. You gotta be involved in it, but cautiously, not crazily, which I think most people are involved on a crazy basis, as
Right.
opposed to, I'm thinking, yeah, when am I going to get out? And what am I going to buy when I get out? That's in today's world, that's the big question. The
It really is.
dollars are a diminishing asset. Any of the institutions where you put your dollars, a lot of them are bankrupt. They're zombies. So what do you do? What should you do? I mean, do you want to buy a whole bunch of gold coins? Gee, I don't feel too good having too many gold coins in my personal possession. I mean, somebody might find out.
Yeah.
Uh, so, this is actually an odd time.
So what do you think? So here's an interesting problem. Let's say, and I know, you don't, I know you don't have any kids and heirs, but like, let's say that you had a $1 million that you wanted to that you wanted to give to your heirs 30 years from now. And what asset could you possibly put that in and have some confidence that that it would even exist 30 years from now? Is there any?
Yeah, it's tough because I'm sure that a rich Russian in 1900 would have said, "Ah, I'm going to buy a fine farm," because Russia was a big wheat producer then, as it is again. It's the world's largest wheat exporter. Most people don't know that, and we used to have to send them wheat to keep them from starving during the waning days of communism. So, can you buy some? Can you buy? Can you buy land? Well, okay, that might work, but the nature of agriculture might change radically over the next 30 years. Farmland might not be worth what it is right now.
And property taxes, right? I mean, it could just, squeeze all the value out of the asset over that 30-year period.
It could, and if you buy an office building that's got some kind of current yield, well, we just see what happened to the price of office buildings with this COVID hysteria. And I question whether they're really going to come back because I think things have changed as far as where knowledge workers are going to work from.
Yep.
So okay, raw land, risky. Buildings, risky. A house, depreciating asset. Consumer good,
Definitely taxed heavily.
definitely taxed heavily. You got maintenance and all that, so it's a problem. You're going to buy common stocks. Well, okay, buying something like Berkshire Hathaway. Okay, probably. I gotta say, I probably buy $1 million right now. That is about 500 1-ounce gold coins, uh, and put them in some safe place. And that's probably as good a bet as anything else. Although in the future, when we start mining the asteroids, they know for a fact there are heavy metals, platinum group, but certainly a lot of gold up there. Is that going to have the same effect on gold as the conquest of Peru and Mexico did? Well, yeah, this is anyway. That'll be past Ray Kurzweil's singularity, which I happen to believe in,
Yep.
mostly anyway. So I don't know what the answer to that is. Maybe half gold and half some kind of a diversified closed-end fund.
Well,
Wouldn't it make
30 years ago, what would you have said?
sense?
It seems like
I
treasuries would
was
have been the
more,
right.
I was more confident about things then, probably because I knew less then than I know now.
Isn't that
You're
weird?
always yeah. The more knowledgeable you could become, the less confident you become of most things. I'm afraid
True.
it's perverse. Uh, the more you know, the less you know that you don't know.
Yeah.
Uh, no question. Back then, I would have said, "No, buy gold,"
Yeah.
and
Yeah.
it wouldn't have been a bad bet. In fact, it would have been a pretty good bet because what was gold 30 years ago, back in 1990? I'm going to say, what, $400? I don't know, something like that.
But treasuries would have been better, right? Or
Would they
buy
have
some
been?
30-year bond or the 30-year even.
Yeah, if you bought the 30-year back then, I don't know. What would you have paid for the 30-year back then, and what was it yielding in 1990? Yeah, interest rates. I think interest rates on the treasuries, a 30-year treasury would have been about 6%.
Oh, really? Okay.
So, and it would have gone up in the meantime, but now it's about maturity time, so it'll be trading at par.
Yeah.
I don't know. No, I think gold would have been a much better bet.
Okay. All right. So I heard a thesis from someone the other day that suggested that that Bitcoin was starting to be looked at by institutions as a treasury asset, something where they could hold things, have them maintain their value, or have them provide stable value essentially over time, and despite everything else that's happening. And I mean, it has worse problems than gold does in terms of, well, there could be an invention of new supply, from asteroid mining with gold. There could be quantum computing that, makes it so that the encryption with Bitcoin in that 30 years, almost certainly you would expect it probably wouldn't, you could break it within that time period. But, it was an interesting notion that not only is it, have we seen it as a way to transfer value across space, but potentially it might be an asset that people start to see as as something that can transfer value across time well as well. And if it can do that, then that would be, I mean, then it is probably the ultimate asset at this point in the world. If that's
What about the possibility of Bitcoin 2.0?
well,
Could something
there's
that's
been a
so
whole
much
bunch of
better
them.
than Bitcoin, people just don't want Bitcoin anymore?
Well, there's been a whole bunch of them, that have. I mean, there's something, there's like I don't know. I think there's 7,000 or so, cryptocurrencies that you can find on exchanges are traded on exchanges, and a lot of those are. Um, there's a bunch of them that are literal forks of Bitcoin. I mean, where they are copies of it, and that then get improved so you can transfer faster. And it's all with trade offs, of course. And then there's things like Monero, which are supposed to be more private in the way that they allow it. They allow transfers to take place. So since some people consider that like a Bitcoin 2.0, the problem is that there's a real network effect thing with cryptocurrencies that exists. Just like I mean, you could start a new Facebook, but like you could start a social network, you could clone it essentially and have it
Yeah.
out of the box be just as good, but it's without network effects, it's totally meaningless.
Yeah, I guess that's called Metcalfe's law.
Yeah,
One telephone is useless. Two telephones is pretty useful, but got a million of them. Now you got something. So same thing. Yeah.
exactly. Yeah. So I don't know, but I thought that was an interesting idea. The idea of being able to transfer value across time and space is something that we have a real need for, and I think gold has served as something that could do that. Space was harder though because it's heavy and it's hard to move. But
Okay, so maybe I'll divide the portfolio into three. One one third a closed-end fund, one third gold, one third Bitcoin.
yeah,
As unpredictable as the future is, I mean, that might be a better way to do it.
yeah, it seems like you have to hedge your bets somewhat. But so right now though, in terms of Bitcoin specifically, do you have any idea what will it feel like to holders of Bitcoin when when the bubble is actually about to burst, or a real bubble is forming? What will it feel like?
Hmm.
Do you have a sense of that?
Well, everybody's going to want to go out and buy stuff that they've always wanted to. They're going to feel rich. Maybe they'll want to buy more because the market's proving them to be right. And that always happens when everybody feels rich. You know, they want more of what's treated them well. I mean, they take a personal psychological interest in it, which is a bad idea with an investment.
Yep.
You know, don't love anything that can't love you back. So, no, I don't think we're there yet.
Yeah.
I don't think we're there yet because Bitcoin is still owned by a very small minority. I don't know how many warm bodies we're talking about, but it's got to be only a few percent of the public.
Yeah, it has to be. I mean, very few people, even young people that I would expect, millennials, to have this be their thing. Something that they were really into. Most don't own it. Don't know. They only have a vague notion of even what it is. And so I think there's plenty of people who could own it that don't own it yet. And I think that's a sign that we're not at the top. I also think that the sentiment is there are, just like with gold, there are haters. There in Bitcoin, there are real haters. I mean, there are people just like they just
Oh yeah.
they can't even imagine how it could possibly be valuable. And I think as long as those people exist, there's an opportunity.
Well, the very fact listen, it doesn't matter whether they're bulls or they're bears. When people become psychologically involved in an investment, I mean, yeah, I know you can read into gold, you can read into all these things, various ideological content. Yeah, I understand that, but don't get emotional about these things. And when that's the case, I tend not to listen to whoever's talking, except to note their psychological state more than
Right.
anything else.
Exactly. Exactly.
I'm not, I'm not worried about it at the moment. I think the takeaway is that, yeah, we're in a real, as Steve Sugarloot likes to say, we're in a melt up, the opposite of a meltdown,
Yeah.
and it's going to come to an end. So be cautious, be real cautious, and be aware. But while it's here, the trend is your friend.
Trend is
Famous last words, because the market could collapse tomorrow.
it could, which is why you don't want to put all your money in any single asset class or even have it all in the market. You want to have some cash on hand. You want to make sure that you can still survive if something goes bad. But you need to have some money at work here in some way, or else your
And,
dollars are being
and
eroded away.
basically, and not have too much debt, because even though we know what's going to happen to the dollar and what its fate is, debt is a constraint over the short run. So,
It is. Okay. All right, great. Well, I appreciate it, Doug. I know you have to get to a conference, so we'll wrap this up here. And thank you for your time. Tomorrow, we're talking with Paul Rosenberg, who we'll get into details with tomorrow. But I'll be excited to have him. He's very, very, very smart man, and we have some important questions for him.
mm, absolutely. And regarding Bitcoin, I guess we could refer people back to our conversation with Marco Witzer the other day. That
Yes.
was, I think, worthwhile. And you're right, Paul is a really smart guy, and it'll be interesting since tomorrow is the date of this Georgia runoff. So we'll see whether the US is going to turn into a police state or not.
We'll find out soon enough. All right. Thank you, Doug. I appreciate it. We'll talk to you tomorrow.